Good morning. This is Horizon's Middle East and Africa, our top stories this morning. Gold and silver continue to plunge, extending a dramatic reversal seen on Friday. The sell-off accelerating in other parts of the market, with stocks and futures also slumping. Meanwhile, the dollar holds on to gains after President Donald Trump nominated Kevin Warsh as the next Federal Reserve Chair. And oil is also extending declines as geopolitical risk recedes after President Trump says Washington is talking with Iran. It's just gone 9 a.m. across the Emirates. I'm Johanna Bersachi in Dubai. So some wild market moves over the course of the weekend. And of course, the big excitement on Friday was the fact that we finally figured out who President Trump's nomination is to be the next Fed chair. That is Kevin Warsh, a name that is familiar to the market. He wasn't necessarily the front runner in pulling market odds towards the end of the week last week, but he was up there. And he is familiar to Wall Street. He's been a Fed policymaker for a very long time. And interestingly, his voting record is actually quite hawkish. However, he has consistently advocated for a smaller balance sheet. So what was the reaction? Why am I giving you all of this background? Because actually the reaction was pretty positive to the USD, and you're seeing that this morning as well. Dollar strengthened on Friday. Today, it is continuing that trend, despite the fact that over the course of the week, we're still down about 1.5%. S&P futures ended a little bit weaker on Friday. Today, that trend is continuing as well. As you can see, S&P futures are actually down 1%, but we are getting a weak handover from Asia this morning. I'll get to that in just a moment. Keep an eye on Brent. We are down 4.5%. This is nothing to do with OPEC, I would say, because they, no surprise to the market, they decided to keep production unchanged until the end of March. All of this is around Iran-U.S. geopolitical premium and the fact that the two sides are ostensibly in negotiations now. At least that is what President Trump is saying. So we'll see if anything comes out of those negotiations. But at least we've moved one step away from being on the brink of conflict between the U.S. and Iran. And take a look at Bitcoin. $75,000 is the handle now, down about 1%. We are following declines of 11% for the month of January. And I just the reason why I wanted to talk about this today is because so many people talk about Bitcoin as a hedge for inflation. If that was the case, in an environment where gold went all the way up to 5,500, why did Bitcoin not do better? I'm just going to plant that there. It was down 11% for January. But switching over, I hinted at this. Let's talk about the price action in metal. Absolutely stunning. This is just today's price action. Gold back down to 4,700, just below, another 4% weaker. On Friday, we dropped around 7% for 9%. That was the biggest drop in a decade for gold. Silver plunged 26% on Friday, the biggest on record. You can see now it's trading below $80 per ounce. Copper also down 3.3%. So absolute calamity in metal space this morning. You could say that a lot of that is on the buildup of speculative positioning, especially in the last couple of days. And some of that positioning is getting cleaned out. We will talk more about that on the show. So a lot going on in markets. And there's also a lot of activity to talk about in Asia as well. Min Min Lo is in Hong Kong. There's a lot of red on the screen this morning, Min Min.
Hey, Jomana. Yes, it's not a strong start to the week. And here in Asia, we are seeing a sell-off in the tech sector. You're seeing all of these tech-heavy indexes, especially the Hang Seng Tech, down by 3.6%. It opened below the 50-day moving average and is now crossed below the 200 days moving average there. The Kospi as well seeing sell-off, especially in the big tech names like SK Hynix and Samsung. The Nikkei here is partially cushioned by the impact of the weaker yen. That is helping to boost the export-driven companies like the auto companies, the chemicals companies. But if you look at the semiconductor industry, the likes of Lasertech, Tokyo Electron, those are also down today. You flip the board and take a look at how China is faring, though. It's also not doing great because we are digesting the PMI numbers that we got this morning and also over the weekend as well. And here you can see big contraction on a manufacturing and non-manufacturing PMI, 49.3, missing most of the estimates. And it really shows you that the economic momentum in China is slowing down. Business confidence is weak. Demand is sluggish. And it's really sending a message that maybe the government needs to pull out more stimulus for the economy. And we'll be watching for that at the 2 sessions in March.
Min Min, thank you so much. Min Min Lo in Hong Kong. Let's get back to our top story and the dramatic reversal in gold and silver prices, which are plunging further this morning. For the latest, our metals and mining reporter Martin Ritchie joins us now from Shanghai. I mean, in the run-up to this sell-off on Friday, which was dramatic in nature, we'd started questioning the sustainability of this rally. Is it fair to say that a lot of that froth and that speculative positioning has come out, or is the clearing level going to be a lot lower, Martin?
I think that some of that froth has definitely come out. We saw the biggest drop in the decades for gold last Friday, in fact, and it's down more than 5% again today. Look, I think throughout last week, all that kind of frenzied trading, all the bulls piling in, I think it was, there was a lot of warnings that this price was going ahead of reality. But now we're in a situation, I think, across gold, silver, and perhaps even copper and metals, where we're looking to see where people start to buy the dip. That was mentioned quite a lot in discussions in China over the weekend. What kind of levels are the Chinese investors that have been particularly rampant in metals trading going to start coming back in? It's not happened yet, obviously, but if things steepen any further, then let's see what happens.
There are reports on the terminal about Chinese speculative buying and some of those positions being trimmed down. What do we know about who exactly has been selling?
So throughout January, there's really been quite unprecedented wave of trading activity. I look quite closely at copper on the Shanghai Futures Exchange, the busiest month on record, and by far the most active day for trading last Friday while things were selling off. It's another busy day again today. Look, there tends to be a group of kind of funds and a group of sort of influential commentators who will steer prices. A lot of those are still bullish. They see copper as an investment for the long term, given its role in the energy transition, given its role in electrification worldwide, and the sort of setting aside the kind of near-term headwinds for demand and just looking at that future. And that's why I was talking about dip buying just now, particularly for the base metals.
Yeah. Well, let's see how it all plays out. It's shaping up to be another ugly morning, though, for metals trading. Lots of these commodities are down significantly again. Martin Ritchie, our metals and mining reporter in Shanghai. Well, let's turn to the Fed now. President Trump's pick of former Fed Governor Kevin Warsh as the next Fed chair has shifted the debate from short-term rates to the central bank's $6.6 trillion balance sheet and its very role in the market. Former Atlanta Fed President Dennis Lockhart reacted to the nomination earlier on Bloomberg.
He's been aligned with President Trump in the White House in recent remarks. So it's not clear to me which Kevin Warsh will show up in May. I think probably he will be data dependent and with the committee will make the best decision he can.
We've also heard opposition from Capitol Hill. Senator Elizabeth Warren is the top Democrat on the Senate Banking Committee, and she questions Kevin Warsh's independence.
He has been known as an interest rate and inflation hawk for years and years, right up until Donald Trump wins the presidency, makes clear that he wants a Federal Reserve chair who's going to lower interest rates. And suddenly it appears that Kevin Warsh has had an epiphany, and everything he thought in all those years beforehand, he no longer thinks.
We're joined now by our News Desk managing editor, Jill Deesa. It's really interesting to hear from what Elizabeth Warren was saying. And the fact that actually, if you look at Kevin Warsh's voting record, he's tended to be on the more hawkish side of the committee. What can we expect from him as potential chair?
Yeah, so I think, Jemana, first of all, you'd kind of want to hear from Kevin Warsh himself on some of his thoughts for the Fed. So I think there's, a little bit of anticipation as to whether he can provide some clarity there. We'll see maybe what he tells the Senate as he's really working toward, that confirmation. But yes, I mean, it is the fact that during his tenure as a Fed governor, he was quite hawkish. Obviously, tune has changed a little bit. He's actually become quite critical of the Fed in the years since he left the Fed. I also think worth pointing out that he was, a contender back in in 2017, when Trump was first in office, before Trump ultimately went with Jerome Powell. Obviously, we know how Trump feels about that decision these days. But I think that those are, kind of, some of the pieces of this dynamic that are interesting. As you've been alluding to, though, Jomana, I think, what markets have really taken an interest in is not just, sort of how Warsh as a Fed governor may impact short-term rates, but really those thoughts that he has on not wanting to extend the Fed's balance sheets and the impact that that could potentially have on long-term rates. There's a lot of questions over, what his feelings about that kind of look like, particularly in recent years after he's left the Fed, and how that might play into his calculus were he actually to be successful in getting that confirmation to the Fed chair. So lots of questions here. I think some of those really, Kevin Warsh himself is the only one that can answer those. But, there is a lot of questions, not just about what he kind of thinks internally, but also about his ability to kind of rally, the rest of the FOMC and ultimately, help, make decisions that way. Because remember, it's not just about the chairman, it's about the rest of the FOMC as well.
Yeah, absolutely. And let me just ask you, what is the reaction being more broadly from both sides of the aisle, Republicans and Democrats? Is there any chance at all that he doesn't get confirmed?
Yeah, that's an interesting question. And I think, obviously you heard from Elizabeth Warren there, you've got, sort of that negative reaction from Democrats. I think what this really comes down to in the Senate, though, is whether there's any Republicans who may defect. One of the interesting ones we're watching is Senator Tom Tillis. He's the retiring governor, or senator, excuse me, from North Carolina. He's indicated that he may not be willing to support any Fed nominee pending the outcome of an investigation into Powell and the Fed. So there are some questions about whether there's a Republican or two that might ultimately not want to vote to confirm here. So I do think that there's some open questions there. It should be a pretty interesting sort of process as it works its way through the Senate. But at least, after, weeks, if not months of speculation over who, Trump may pick, you now have a name. Now we'll have to see if that's ultimately successful here.
Yeah. Jill D says, thank you so much. NVIDIA CEO Jensen Huang says the company's proposed $100 billion investment in OpenAI was never a commitment. The Wall Street Journal earlier reported that the investment plan announced in September had stalled after some people inside NVIDIA expressed doubts about the deal. Huang, for his part, downplayed the report, saying NVIDIA will continue to invest in the ChatGPT maker.
Sam is closing the round, and we will absolutely be involved.
How much? Can you say how much? Can you say how much?
We will invest a great deal of money. Probably the largest investment we've ever made.
The large?
Yeah.
So is that going to be over 100 billion?
No. Nothing like that.
The U.S. Justice Department has released about 3.5 million more pages from its Jeffrey Epstein investigations. The files show that some prominent figures, including Commerce Secretary Howard Lutnick, stayed in contact with Epstein longer than they had claimed. The released materials also include emails and messages with Elon Musk, who said he repeatedly declined invitations from Epstein. Coming up, we'll get more insight on what Kevin Warsh's nomination means for Fed policy with Amundi Investment Institute. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jomana Bersachi in Dubai. President Trump's nomination of Kevin Warsh for Fed chair has sparked a debate on the path for rates and its $6.6 trillion balance sheet. Joining us now is Guy Stear, head of developed market strategy at Amundi Investment Institute. Very curious to hear your thoughts on Kevin Warsh himself before we talk about the market reaction.
So I think it's a good question because there are two types of Kevin Warshes, and we don't really know which one we're going to end up getting. There's the Kevin Warsh who is most vocal about the fact that the Fed shouldn't have increased its balance sheet and should continue to reduce it. And there's the Kevin Warsh who's been seen as being very supportive of whatever Donald Trump's policy is. And I think the problem is not going to be, the market has assumed that we'll have lower short-term interest rates and there'll be control the balance sheet. So this means that the curve will steepen. And we think that makes sense because the curve can probably continue to steepen towards the levels of 2011, 2012. But the problem is going to be if actual long rates start to go up during this curve steepening, then there's going to be pressure probably on the Fed to expand the balance sheet. And that's going to be an issue, we think, by the third quarter, fourth quarter of this year.
Well, what do you think it necessarily means for monetary policy, though?
I think probably short-term interest rates are definitely going to be cut a couple of times in the second quarter, but that would have been likely whoever was in the Fed. What we're really seeing is that U.S. job creation is slowing down, and it's a natural reaction of the Fed to stimulate the economy with easier policy as a result of that.
Yeah.
I think the problem really becomes that the Treasury's been very clear, and President Trump has been very clear, that they want 10-year Treasuries to stay in a range of 4 to 4.5%. So if we start getting interest rate cuts and people start worrying about inflation, in a world where the government needs money, in a world where corporations need money, because there's going to be a lot of capex, there's going to be upward pressure on yields.
And the only way you do that is via quantitative easing and financial repression.
Well, we think
you can't dictate where the 10-year U.S. Treasury lands.
Absolutely.
Yeah.
I mean, you need another buyer, and it would get even more complicated if foreign investors start pulling out.
Okay, so steepening trend intact. What about the USD? We saw actually support come through for the dollar on Friday, which was surprising given how much it's been selling off in the run-up to this announcement. Were you surprised at the reaction?
I think it's consistent with the idea that Kevin Warsh is, in his heart of hearts, more of a monetary hawk. And so I think that was the first reaction of the market. And I think the first reaction of the market is to be bullish treasuries, to have curve steepening trades. And curve steepening trades, I think, make a lot of sense. And then also to be bullish on the dollar. I think in the fullness of time, this is probably going to change.
Are there any fixed income markets that you would want to own here? I mean, we've been tracking the movement in JGBs very closely, obviously, the past month.
I think JGBs are one market which is definitely getting to interesting levels. I think people in the JGB market are focused on the idea that Japanese ALM accounts, so pension funds, life insurance companies, could bring money back from the U.S. to Japan. But that's only going to happen when yen volatility increases a lot. So this is why the question of the dollar is important. If that drives yen volatility, then the money will come back, and that will support JGBs. But I think there's a second driver which will take place before that. As the curve has steepened so much, for a lot of Japanese regional banks, carry is looking very attractive. So borrowing in the short term to invest in JGBs is looking attractive. And I think that is what is going to stabilize and ultimately drive 10-year JGB yields a little bit lower. I'm going to add one more area which I think is attractive. European fixed income is attractive, particularly for U.S. investors or investors in this region who hedge back into their domestic currencies. You're getting a pickup over treasuries.
Are you talking about bunds or OATs here?
Bunds, OATs.
Because OAT is a different story.
OAT bund spreads have been very stable. Probably the best picks of all would be peripherals in Europe, because we can see BTP spreads to Germany continue to contract. Bono spreads to Germany continue to contract. But in general, European fixed income is an attractive investment.
Yeah, even though the ECB have essentially signaled that they're done. And you have, a few people, actually lone hawks coming out once again and talking about upside risk to inflation.
Well, we think that may change. I mean, the ECB changed its tone, particularly in the fourth quarter, when they started raising their forecasts of 2026 growth. But what we've seen since then is a lot of the high-frequency indicators have not been that good. We still think that European consumer demand in the beginning of 2026 will be a little bit soft, that the rollout of the German fiscal policy will probably take longer than the German government thinks, because it's something they haven't done. And so we think that ultimately by the second quarter, actually the ECB could cut 2 times.
Okay, so still Goldilocks environment then?
It's, I mean, to be a real Goldilocks environment in Europe, we need somewhat stronger growth, and I think we'll get it in the second half of 2026. I think the first half of 2026 will probably be the economy is a little bit soft. It needs some stimulus from the ECB.
Yeah. Okay. Great to chat to you. Thanks so much.
Thank you for having me.
We went for a little tour around the world there in fixed income. Guy Stear, head of developed market strategy at Amundi Investment Institute. Well, coming up, Iran's top leader warns of regional war as tensions continue to mount over potential U.S. strikes on the Islamic Republic. We'll bring you that story next. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Iran's Supreme Leader Ayatollah Ali Khamenei has warned of a regional war as tensions continue to mount over potential U.S. strikes. But President Trump says he's still hoping to reach a deal.
This gentleman regularly says he brought warships. The Iranian nation will deliver a firm blow to anyone who attacks or harasses it. The Americans know that if they start a war, this time it will be a regional war.
why wouldn't he say that? Of course you're going to say that, but we have the biggest, most powerful ships in the world over there, very close, a couple of days, and hopefully we'll make a deal. If we don't make a deal, then we'll find out whether or not he was right.
For more, we're now joined by Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. Stuart, on Friday, I think we left for the weekend thinking there was a high probability of something perhaps happening militarily over the course of the weekend, but it seems as though, at least for Middle East nations, they've been really trying to push the diplomatic channel. President Trump saying that he's confident, he's hopeful that there will be a deal. What do we know?
Yeah, certainly hopeful. I don't know about confident. I mean, the issue here is what exactly are the red lines that the US is going to set. So that's been a little bit vague. He's spoken about nuclear and then nuclear weapons. There's been talk about the missile program. Iran has set its own red lines and said, you know, it's going to reserve the right to continue to enrich uranium, that it's never had any intention of having nuclear weapons in the first place, but it also reserves the right to have a missile program to be able to defend itself. Now, quite how compatible those two are, it's really hard to see. What he's doing at the moment is moving enough military hardware into the region to apply pressure, yes, but also to give himself options. So I don't think we're there yet.
So we've spoken about that armada, quote unquote, that the U.S. has sent towards the Arabian Sea, the carrier, and at the same time, we heard from the Ayatollah over the course of the weekend, and he warned the U.S. that if the U.S. did strike, they were risking broader regional conflict, i.e., you know, what he's insinuating there is that U.S. assets in the region dotted around these GCC nations could be targets.
Yeah, and I don't think he's the only one. I mean, if you, again, the diplomatic efforts that you mentioned earlier, which have indeed been frantic and far-reaching, I think a lot of the neighbouring countries, that is, the Arabian Peninsula in particular, shares exactly the same concerns. And, you know, there is precedent here. You know, you remember it was only, 6-7 months ago that they fired missiles at Doha. Now, it was carefully calibrated and well choreographed, but nonetheless, that is some indication of the potential here.
Yeah. And do we understand that for the time being, Iran are willing to hold off from any activity? I know that they had planned military exercises in the Strait of Hormuz. They're holding back for now. No,
I mean, they're continuing, but in terms of concrete actions of being, you know, the first strike policy, no. I mean, I don't think Iran has any intentions of going first on this. You know, they'd much rather come to a deal. Remember, they are in a precarious position, both economically, militarily, by just about every measure. You know, they are probably the most fragile they've been since 1979.
Yeah. Stuart, thank you so much. Stuart Livingstone-Wallace, Bloomberg's executive editor for Middle East, North Africa and Russia. And before we head to break, a look at equity futures. Things are not looking pretty today. S&P down 1.1%. Take a look at NASDAQ, down 1.6% today and traded. It is a day of red. The handover from Asia not pretty as well as some of the tech names get hit. Now, coming up, oil's rally runs out of steam after Trump reiterates being open to negotiations with Iran. We'll speak to Karen Young, senior research scholar at Columbia University next. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. Gold and silver continue to plunge, extending a dramatic reversal seen on Friday. The sell-off accelerating in other parts of the market, with stocks and futures also slumping. Meanwhile, the dollar holds on to gains after President Trump nominated Kevin Warsh as the next Federal Reserve chair. And oil is also extending declines as geopolitical risk recedes after President Trump says Washington is talking with Iran. It's just gone 9:30 a.m. across the Emirates. I'm Jumana Versace in Dubai. There is a lot of red on the screen this morning. We have equity futures significantly lower, S&P down 1.2%, NASDAQ futures not shown here but down almost 2%. This after a weaker close on Friday. The handover from Asia not pretty today as well. A lot of those tech stocks getting hit, especially the chip makers, which were the relative winners over the course of the last few weeks. So it really does speak to a lot of this speculative positioning that had been put on in the run-up to Friday being taken off. The USD also seeing some support come through this morning, up 0.2%. This after President Trump announced that Kevin Warsh was his nomination to succeed the Fed Chair Jerome Powell. And on the back of that, you really saw some major market moves. I'll get to metals in just a moment. But also in oil, what you're seeing today is stronger dollar, weaker oil, down 5.3%, keeping a close eye on what's been happening between Iran and U.S., with President Trump saying that he's hopeful that there will be a deal with Iran. So moving away from being very close to the brink of extra conflict or another round of conflict to now potentially pursuing that diplomatic channel. So that's why we're seeing oil lower this morning. And then Bitcoin down 2%, $75,000 is where we're at, down 11% throughout the course of January. Cannot seem to get a bid. Again, here we're seeing a lot of trimming of positioning in cryptocurrencies and in Bitcoin specifically. But let's flip the board and talk about what's been going on in metals. We have to talk about the metals price action. My goodness, gold 9% weaker on Friday. That was the biggest drop in a decade. Today, down another 5.6%. So we're back down to basically $4,600. We were close to $5,600 just a couple of days ago. Take a look at silver, plunging this morning, down 11%. Friday, we were down 26%. It's just an eye-watering amount, the biggest on record. And of course, that does speak to, once again, a lot of the froth that had been built up in that market. But this is where we're trading now, $76. Also, other metals, base metals, dropping as well. Copper down 3.3%, aluminium down 3.1%. Remember, copper also briefly touched 14,500 and then quickly unraveled. So a lot of this is just positioning unwinds. But again, the frenzy that we saw on the way up, we're seeing a frenzy on the way out as well. Okay, let's also check in on how markets in Asia are faring. Min Min Lo is in Hong Kong. And Min Min, what explains the red on the screens that we're seeing today?
Yeah, as you said, the commodity story, the tech sell-off as well, concerned over overextended AI spending. And here we are taking a look at the currency markets because we have seen the dollar rebounding. Part of it is the Kevin Walsh effect. And we are seeing Asian currencies under pressure. But you take a look at the won is weakening by 1% against the US dollar. And it, again, it's what I said earlier, the selling off in the tech sector that is putting pressure on the Korean won, especially fueled by foreign selling. The yen here also weakening after Takaichi made some comments on X clarifying her stance on the weaker yen. And that is fueling speculation that maybe the government may not be so keen to intervene to support the currency. And that is putting pressure on JGBs. We are seeing some of the exporters, though, getting lifted by the weaker yen. The yuan really is the last soldier standing, defending against the US dollar. And this is really supported by the government and by the PBOC's fix, by President Xi's endorsement as well. He has been talking about wanting the yuan to be an international reserve currency, and we are seeing those comments being published by a party journal, Qiu Shi. But flip the board, we take a look at how the stock market in China is doing, though, and you can see, yes, red across the street again because we were digesting the PMI data that came out over the weekend, and this morning as well, huge miss on the official manufacturing and non-manufacturing PMI, contracting and missing estimates there, and it really shows you that the economic momentum in China is slowing down.
Min Min, thank you so much. Min Min Lo in Hong Kong. Now, oil is slumping today, as we were just going over, after U.S. President Donald Trump reiterated openness to negotiations with Iran, though investors remain on edge about the potential for further tensions. Joining us now is Karen Young, Senior Research Scholar from Columbia University Center on Global Energy Policy. Karen, what hope is there for a diplomatic breakthrough at this stage between the U.S. and Iran?
Well, thank you, Jomana. I think what we're trying to analyze is the multiple scenarios, the multiple directions that this conflict and threat of really much worse conflict is coming. So I do think that President Trump would like to see some sort of deal. It gives him room to back down to some of the more really difficult military threats. He has no interest in a military takeover or governance of Iran. He's not interested in that. But something akin to a bit of a leadership reshuffling, some sort of deal on the nuclear program, and perhaps getting to some of the tougher issues which regional partners really care about. The Israelis are extremely concerned about Iran's missile stockpile. If he were able to negotiate on those issues, if Iran were willing to move position, then yes. But I think those are very, very big ifs, and it's more likely that we're in an inter period where we're see both sides sort of buying time.
Yeah. Karen, how likely is it that we get perhaps a repeat of the Venezuela template and that the figurehead is removed and the Trump administration cuts a deal with the remaining people who are still representative of the regime, but with the figurehead gone, i.e., could the supreme leader be replaced in a deal that the U.S. is seeking?
I think that would be certainly a scenario that the Trump administration would look favorably upon. It is not something, of course, that the supreme leader would willingly concede to. And so that is, puts us into the realm of a whole lot of other possibilities, which, really would depend how the rest of the leadership structure, how the IRGC responded to such a threat and what, such a reshuffling would look like. And I think, most people would assume that would entail some form of violence and attack.
Okay. Keeping a close eye on what's been happening with energy, geopolitical premium coming out of these markets today with oil plunging around 5%. How much premium do you think was baked in to begin with? And is it justified that oil is actually falling so much on the potential for a diplomatic breakthrough, but of course no guarantee and the real possibility that both sides are just buying time here?
Yeah, but I think we've been seeing this for at least 2 years now, where in terms of regional risk and oil price, oil markets have been extremely patient and waiting for some real threat to energy infrastructure to make a move into a price spike. So we saw a little bit of a climb in the last week, but really staying within the 60s, now back down a bit. This goes back to the fact that we have a very well-supplied market. We have spare capacity that is available out of the Arabian Peninsula. And so there's no big fear until something, really happens, and that is not where we are yet. And I think in terms of those scenarios, you could see a range of pricing. So, if we start to see some sort of symbolic attacks like what happened last summer during the 12-day war, you get into the under $80 a barrel range. But if you start to see real limitations or attacks in transit in the Strait of Hormuz or attacks on physical infrastructure, then the market, I think, would change considerably.
Yeah, but at the same time, Iran is still producing about 3.5 million barrels a day. It's still exporting around 1.5 million barrels per day. And that physical supply has not actually been impacted.
That's exactly right. And so one scenario is, probably the one that would be the easiest in some ways because of the presence of U.S. naval forces outside of the Strait of Hormuz, would be to enforce more sanctions on Iranian exports, to seize ships, to seize tankers. And that is something that, maybe a scenario that we see in the future, the more enforcement of existing sanctions, there would be a legal basis for that. And it would see, some decline, and that would, impact probably the Chinese more than anyone else on the buying side. But there's plenty of supply elsewhere to make up for that loss.
Yeah, and just a quick final for you. Obviously, we did have the OPEC Plus over the weekend, keeping production stable for March. But some people are saying what actually stood out from the announcement is what they didn't say about the rest of the year, keeping their cards close to their chest, and which tells you that should the need arise, there is still plenty of spare capacity that OPEC can bring to the market.
That's right. It's available, and as long as there's no threat to transit or physical infrastructure, production infrastructure, that is absolutely ready and willing. And we've seen, particularly from Saudi Arabia and the UAE, an interest in increasing their production and export. So they're on call.
Karen, thank you so much. Always good to chat to you. Karen E. Young, Senior Research Scholar at Columbia University. Now, the U.S. government has entered a partial shutdown despite a last-ditch funding deal being approved by the Senate last Friday. Democrats had refused to provide more funding to the Department of Homeland Security, DHS, following the fatal shooting of 2 U.S. citizens by federal agents. The bill passed by the Senate continues funding for 2 weeks to allow for more negotiations. The House is expected to vote on the measure early this week, allowing affected departments to reopen. And coming up, private credit is gaining traction as the demand for alternative financing grows. We'll speak to Abu Dhabi-based Ruya Partners, which is raising capital to fill that gap in the Kingdom of Saudi Arabia. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jemana Bersechi in Dubai. Saudi Arabia's economy expanded at the fastest pace in 3 years in 2025. The oil sector emerged as a stronger engine of growth under new OPEC Plus supply policy. GDP rose 4.5%, while the oil economy grew 5.6%. Non-oil activity slowed for a third straight year, but it was still the biggest contributor to overall economic expansion in 2025. And private credit is emerging as one of the most important sources of alternative financing in the Middle East. That's as banks pull back just as demand for capital accelerates under Saudi Arabia's Vision 2030 agenda. That gap is creating opportunities for new players like Abu Dhabi-based Ruya Partners, which is stepping in to that space, raising as much as $400 million. It's focused on middle market lending across Saudi Arabia and the UAE. Joining us now is Omar AlYawer, a partner at Ruya Partners. Really good to have you with us. So just picking up on those Saudi Arabia GDP figures, quite robust, I will say, in the context of global growth. And we speak a lot about Saudi diversification. Where does private credit come into that mix? Because also it's about diversification, not just of the sectors of the economy, but funding for these sectors as well.
Absolutely. Thank you for your opportunity. Look, private credit, while today is getting a lot of spotlight, it's really a story that we've been investing in since 2009 in Saudi as well as the UAE and other geographies. But more so than ever now, the need for private credit is quite urgent in that the middle class, the mid-market corporates and adjacent industries really need financing to help them grow to the next stage, to achieve the numbers, the figures of GDP contribution from the SME segment for Vision 2030, Vision 2040. And that's where you're seeing a significant increase in the type of opportunities that we're seeing across our desk.
And is it because some of the domestic banks, many of the domestic banks have been facing liquidity constraints?
It actually is it's a double-edged sword. The banks in our region historically have never been actually structured to lend to mid-market corporates. They've historically lent to large corporations, government-backed entities, but the mid-market has been left kind of unsupported with the type of financing that they need. So to give you an idea, back in 2009 when we first launched our first fund, we used to see about $100 million worth of transactions each year. Fast forward to today, we're seeing about 2.7 to 2.8 billion each year, just us as Ruya Partners. So a huge demand, underserved market from traditional banking systems.
And I guess it's growing because the economy is growing and diversifying. How has fundraising changed? You mentioned that this is your second fund. Has the environment for fundraising changed simply because there is a lot more interest in private credit these days?
Excellent question, and it's been a beautiful story evolving both in UAE and Saudi. And the largest allocators, i.e. the sovereign wealth funds, pensions, and endowments, have also shifted their outlook of only investing to international managers to actually looking inwards to regional managers and local managers like us and others to actually help us fuel that growth, the next stage of growth for the mid-market space. So when Fund 1 was sub $200 million, and it took us almost 3 years to actually launch, Fund 2 were just launched 2 months ago in terms of fundraising, and we're already halfway through.
Yeah.
So the type of sophistication is also a really great sign.
Do you worry about competition from some of the international firms? I remember back at FII, I was having these conversations with other, some of these big Wall Street titans eyeing a private credit opportunity as well. And also, many of the PE firms in the region too.
It's actually a great story. It's an evolving story. There's space for all of us to play in. And what I mean by that, the big blue chip names that are coming into our region, they're coming in making deals from New York and London. And when they're coming with quite large fund sizes, they're typically looking for deals that are much bigger than what we're actually seeing, i.e. they're looking for a minimum deal transaction of 100 million plus. What we're actually solving for is financing needs anywhere from $20 to $50 million. That space is still a locals play. The deal sourcing, unlike the West, is not sponsor-led activities. It's actually bilateral. So we have to know these family groups that know and need that type of financing and don't know the big names.
What are the specific sectors that you're focused on in that mid-level market?
We're actually sector agnostic. We've done things in the health and fitness. We've done in energy. We've done in diaper manufacturing. So really the economy, especially in Saudi and UAE, is quite diverse. It's no longer relying on pure energy play. So we actually avoid doing more than 10 to 15% in one sector to avoid this trap that people think that the Middle East is only about energy.
Yeah, for sure. Throughout the course of 2025, private credit was a really hot topic, obviously. And we spoke about the compression of spreads in that space because there was so much interest and that was bound to happen. And I wonder how specifically the direct lending, the private credit space in the Kingdom of Saudi Arabia and the UAE compares on an IRR basis versus other jurisdictions around the world? Are you still getting a preferential IRR in this part of the world because it's a higher growth economy?
It's a great question. Actually, you know, when people always, in conferences especially, they always wonder, well, is there a bubble in private credit? And they kind of compare or lump the entire private credit ecosystem, U.S. with the Middle East. And it's two very different stories. I would say we're in 2.0 version of private credit in the Middle East, whereas in the West, they've gone through various strategies of private credit. We are only dealing right now with the senior direct lending. So on a comparative basis, we generate twice the returns per turn of leverage as compared to our peers in the West. Moreover, we as fund managers and our peers in our region don't actually use leverage on a fund level. In the West, to accrete the similar type of returns of 17, 18% IRR, the fund itself typically has leverage on the back end. We typically are not doing that. We're doing it just by the actual loans themselves.
Okay, interesting. And then how does the landscape in Saudi Arabia differ from the UAE, just in terms of private credit?
The interesting thing, actually, is quite interesting for both UAE and Saudi. UAE businesses are actually looking for financing to grow into Saudi, at least what we're seeing for the last 3 years. Saudi corporates are actually looking to grow more in Saudi. So most of the financing requirements that we see is actually to continue building and expanding. Perhaps it's a company in Yumbu that wants to grow into Riyadh and other adjacent cities, but really it's a Saudi national story of across the spectrum and across sectors. That's why we stay sector agnostic. We don't want to be just pigeonholed to only energy when there's so much more to that economy.
Ahmad, really good to chat to you. Thank you so much for joining our show today. Omar AlYawer from Ruya Partners. Well, for more of these stories looking into the intersection of wealth and power in the region, sign up for our Mideast Money newsletter on Bloomberg.com. And the Wall Street Journal reports on Abu Dhabi Royal signed a secret deal with the Trump family to purchase a $500 million stake in their cryptocurrency venture. Emissaries of Sheikh Tahnoon bin Zayed Al Nahyan reportedly inked the deal with Eric Trump to buy a 49% stake in World Liberty Financial 4 days before President Trump's inauguration last year. A spokesman for World Liberty Financial says President Trump has had no involvement in the transaction or in the company since taking office. And coming up, we'll be taking a closer look at Turkey's growing military presence in Somalia. This is Bloomberg. Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Turkey has sent F-16 fighter jets to Somalia to step up strikes on Al-Shabaab militants and protect its growing interest in the Horn of Africa country. Sources tell us the move is meant to bolster Turkish drone operations against the Islamic group that's been waging an insurgency against the government in Mogadishu. Joining us now from Johannesburg is our Chief Africa correspondent, Jennifer Zavazaja. Jen, what is behind this most recent move out of Turkey?
Right, Jumana. Well, Bloomberg has reported for quite some time about the ties between Somalia and Turkey. As we've mentioned before, we have seen at least drones. We have seen training going on between Turkish officials and also those in Somalia. But the fact that we are now actually seeing manned aircraft going into Mogadishu and in Somalia suggests there's potentially even more of a growing interest by Ankara to protect some of their own interests within the region. Now, Bloomberg has reported some of these interests have to do with the fact that later on in the year, Turkey is expecting to start drilling off the coast of Somalia. There's also an interest in terms of defense. We also have in energy and infrastructure projects that we've reported on. And so it's seeming like as we are seeing increased tensions within the Horn of Africa, potentially there is an even more vetted interest by Turkey and also by some of the other Middle Eastern nations to protect their own interest within the nations. And as you were just pointing out there in the intro, there is, of course, the focus there on Islamist militants. But many of our reporting suggests that there is some increased tensions between a number of Middle Eastern nations in the region. And so perhaps there are some other measures that are going into play as we continue to see more nations like Turkey and others moving into Somalia and some of the other regions, or some of the other countries, excuse me, off the Horn of Africa. Yeah, well, you mentioned some of those other countries. How much of this move from Turkey is about countering
some of their Gulf rivals at combating Al-Shabaab?
Well, it's interesting, Jumana, because if you take a look at on the face of it, this is, of course, intended to be about counterterrorism. You pointed there in the intro, Al-Shabaab and Islamist militants that have been an issue in the region. But then you also have to take a look at what we've seen over the past few weeks and months. We should, of course, note that Somalia and the UAE have recently severed ties, at least Somalia, for their part. In fact, their decision to end security imports deals with the UAE over some of their disputes with the UAE, former closer ties with the breakaway region of Somaliland. That has angered some of the other Gulf nations like Saudi Arabia, Turkey, and Egypt. And so Bloomberg reporting suggests that we have seen some discussions between some of these other nations about how, in fact, they can then counter what is seeming like to be a bit of a division between some nations supporting Somalia and Somaliland. So it seems like both of these issues are at play, at least in terms of this area.
Jen, thank you so much. Jennifer Savasaja. All right, and leaving you with a look at markets because it is a major market meltdown today. More on Daybreak Europe coming up.